Good morning, it's the 21st of April. I'm Joe Neighbour, and today I'll be running through some charts on oil just to give you a fresh look at what we're seeing on the charts and how price action has developed over the last week, and what the latest headlines are as well in the oil market and what's impacting supply and demand. So first up, in terms of the news, oil was falling for a second straight day yesterday, weighed down by concerns that the surging COVID-19 cases in India will drive down fuel demand in the world's third biggest oil importer. Obviously, we've seen the news that's surfaced over recent weeks with regards to India and how they're struggling to cope with the latest surge of the virus over there. Obviously, we wish everybody well and hope that they can get it under control soon. But in terms of how that's impacting markets, obviously oil is, the third biggest country for importing oil, so it's going to have a massive impact on the price. Now, this is the daily chart that we've got up in front of you today. I'm going to talk you through how I'm sort of setting up and what I'm seeing on the charts at the moment. First up, I'm just going to take a look at the candle that was posted yesterday because obviously that's the most relevant one. And as you can see here on the 20th of April, we posted this red looking candle here. Now, why is this significant? Well, it's significant because it moved above the highs of the previous sessions. So on the 16th of April, we posted a high at 63.90. We moved above that yesterday, posting highs of 64.33. But throughout the session, we saw some quite aggressive selling, and the price actually slipped well below the lows of the previous session to form quite a big engulfing candle or a bearish outside day. So an outside day occurs when you see a move above the highs of the previous session and we close below the lows of the previous session also. So there we have that confirmed, that outside day, and that's a reversal candle. You can trade them in isolation if you've got a trading model, if that's something that you look to use. You'd simply just open a new trade today and expecting a continuation lower in the price of oil. So with that candle alone, we can summarize that the outlook in the very, very short term is quite bearish. What I'm going to do now is just draw on what I see on the charts right now. So I had this on before. This is a bullish channel, and the price has obviously been contained within this bullish channel for a number of months. We're going back down to October last year, before finally seeing a break to the downside on the 18th of March. So we've broken down, and since then we've seen some real choppy price action. The ranges have actually been quite large, as you can see by the size of the candles relative to these candles that we saw over to the left hand side. So price action is very choppy, meaning that it's probably going to be very difficult for it to be traded in a short-term manner on your trading accounts. Now, in terms of where resistance has formed, I like to use these candles prior to a big impulsive move down as an indication of where resistance and supports might form. So the low of this candle here prior to this impulsive move to the downside is an area that I'm looking at for that to form resistance. And as you can see, it's done a pretty good job. So 14th of April, we made the first attempt at trying to overcome that. And then in subsequent days, we saw a narrowing of the price ranges as it failed to overcome that 63.60 level. And then yesterday, although we had a little bit of a poke above it to the upside, we did close significantly below it and form this bearish outside candle. So this has formed a nice resistance level, a nice sort of line in the sand for, certainly for me, from a trading perspective. That would be the area that I would be looking to probably have a stop loss above if I was looking to take any short trades today. The other thing that I wanted to point out on this chart, and something that I think is quite relevant, is the volume. Now, if you look to the lower part of the chart, obviously we've got all the volume statistics down here. And as I mentioned, in this sort of choppy phase here, where the ranges are quite big, you can actually see that the volume was quite high in and amongst this. So a real sort of indecision, if you like, but a lot of participants in the market. So maybe that's a rotation. Maybe we're actually seeing money coming out of it, but also new money coming in. It's quite a difficult one to pinpoint, but I think the real important part is this part here. So in this sort of grind higher, or this attempt to overcome this resistance level, what we have seen is the volume drop off quite considerably. So obviously a lack of participation in and amongst here. We didn't really see a massive volume spike yesterday on this selling. So it looks to me as though we're going to see more indecision here in this market. But for me, it is tainted with a bit of a bullish bias for now, just because of that candle that we posted yesterday. So that rounds up where what I'm looking at the moment. Obviously, we've got the headlines. We're watching the situation in India. And of course, in other countries as well, where coronavirus is seemingly getting back out of control again. We've got to keep an eye on these levels at 63.60. I think in the short term, if that can be overcome, then maybe we'll see a continuation higher. But for now, looking for more downside in the very short term in oil. In terms of targets, I'd be looking for the lows down here at sort of 57.20-ish as a short term target. So you could say we've got maybe a bit of a small range going on here. If you were to sell here, hoping that that resistance were to hold and target a move down to the lower end of that range, then we're looking at about 2.25 in terms of risk reward on that one. So not a bad setup, but it's going to be choppy. I would have thought. So hopefully that's helped. I'll be back tomorrow with some FX charts, and in the meantime, trade safe. Bye bye.